Hey everybody, welcome back. So it's not been a great week here in the stock market. Lots of people losing lots of money. It hasn't been that long since my last video, but I'm just going to get back on here and kind of share some thoughts. What I'm still doing, I'm still about 35% cash. I've been that way since December. I've sold some things, but then I buy back in some things. So basically, what I want to share is what I think is honestly probably the most kind of undervalued or not talked about sector in the market right now, and that's the trucking sector. What I want to talk about is Old Dominion Freight Line and SAIA, S-A-I-A, in case you want that spelled. So those are two trucking stocks that I'm buying. And why am I buying this? Because if you go back and you look at history, in particular with Old Dominion Freight Line, you'll get a grasp of the max drawdowns. That means how far the stocks have fallen in recessions and great financial crisis and so far, and so forth. So if you go back and you look at that, generally what you're looking at is like a 30 to 40% max drawdown, okay? And Old Dominion Freight Line is now 35% off of its 52-week high. So this thing has already drawn down quite a bit. And these trucking stocks, by the way, they have been falling since November of 2024. They are leading indicators. So when these things started falling, it's kind of already a sign that something was going on, okay? So I've been buying some Old Dominion Freight Line. It was funny, I bought it and then the darn thing fell like 10% that one day. I was like, oh God, I was early again. But then it went back up and I bought some more. So I've been buying that stock and I've been buying SAIA. The SAIA is going to probably draw down more. So right now, I think it's got a drawdown of like 48%. It could go down as much as 60%. So another 20% if we're like in like great financial crisis kind of crash, right? But I just think that the risk to reward ratio with Old Dominion Freight Line is quite great as far as I'm concerned. I think if your holding time is 5 years and more, you should be okay in this stock. At the same time, I'm not a financial advisor. I'm just telling you what I'm doing. Another one that I'm buying is Regions, the bank. This is much riskier. We've already had a drawdown off of its 52-week high of about 33%. This could go down to, minus 60% as well. So we could still be looking at almost another 30% drop from here. Sorry if this is moving around. It's just old school. I'm just holding the camera. I don't have time for these gadgets and things. But Regions Financial, one reason I like Regions is I'm not a dividend chaser, but this stock is paying like, let me see my numbers, 5.4% dividend right now. Payout ratio is low. So, if the stock market crashes, you get a 5.4% yield off of your stock. And if you've got a long-term horizon, I think this will eventually go back up. But it is a bank and it will probably get completely clobbered in a stock market crash, okay? Other things I bought a little bit more of Cincinnati Financial. This is another one that would get clobbered in a stock market crash. But looking at the ratios to the S&P versus the stock, I think that the risk reward is a little better than just buying a market ETF right now, okay? It's not what I've been plowing into. I used to own this stock. I made some decent money off of this stock. And so I'm buying back in, getting a little bit of dividend. I think it's at least a 2% dividend. Still buying the South America company, ticker symbol BRFS, okay? I think it's BRFS, something like that. This is the South America kind of meat and poultry processing company. And I just think it's a good place to hang out. They got to get a little bit of international exposure. And this thing has been just clobbered and beat down. The PE is like 9, pays over 3% dividend. I think it's a nice place to I've got this one in my IRA, my retirement account. Trump's tariffs are just completely demolishing the stock market. And rightfully so. There's a lot of uncertainty. People don't like uncertainty. People's 401ks are getting demolished. At the same time, I don't understand what people were thinking when they bought these retail stocks. I used to own some of these retail stocks the first time Trump was in office. Like I owned Hooker Furniture Company. I think I owned American Eagle. And these companies had all these awful problems the first time Trump was in office, like those first tariffs that he instigated. Then they moved out of China and they moved into Vietnam, and now there's a 49% tariff on Vietnam, so they're screwed again. So, like I said, I just don't know why anybody would want to be in those heavily right now, because I think it's just going to get worse. There's all this uncertainty. What are the CEOs thinking? Like, we got to fix this. Oh no, we don't have to fix it. Oh, we do have to fix it. Like, who knows, depending on Trump's mood of the week, right? So I just don't think this is a good look for those retail companies. So I'm not buying retail. I haven't bought retail in many years. I think right now the trucking sector is probably the best sector as far as what I have been seeing. You got stocks like UPS though; those are transport stocks. That stock looks awful over the last year. Oh my God, I couldn't believe how bad it looked. I looked at it the other day. I was like, man, UPS is just getting demolished. I don't think I would be buying that, even though that looks like it's cheap. I think it's cheap for a reason. Whereas with Old Dominion Freight Line and these trucking stocks, they're going to eventually come back, over the next 5 years. They got to come back, okay? They're not going to go out. Old Dominion Freight Line's not going to go out of business, I don't think. These trucking stocks are leading indicators. So when there is an economic recovery, your stock prices are going to probably go up before the market, if that makes sense, okay? So that's my kind of stock picks of the week. At the same time, I'm not telling you to go out and buy a bunch of trucking stocks just because I am. That's just what I'm doing. I have been selling some of my market ETFs. Like I just don't really feel safe in those market ETFs right now. I'd rather be in cash and just nibbling at some things that I think are deals. Okay, you all take care.